FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. I'm Kerry Lutz. The date is December 1st, 2015. This year is almost shot for precious metals. That's probably a good thing. For the stock market, well, we'll talk about that. But, you know, it's that time. We've got Mickey Fulp on with us, the mercenary geologist. And this is Mickey Fulp's monthly major market review for December. And Mickey, how are you?
I'm well, Kerry. I don't know if they're all major markets, but it is the monthly review. So,
well, they're major to us because we're covering them.
Exactly. So that's where our money is. So
that's it. So we're looking here at the stock markets first and foremost, and not a heck of a lot of activity on the majors, but interesting little outcome there, isn't it?
Yeah, well, the markets were yada, 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 blah, blah, blah again this month. The Dow essentially flat, 0.3% up. S&P 500 changed a point over the month. The NatGas was up 1.1%. It's in fairly rarefied territory at 5,100 and change. A Russell 2000 was a pretty good performer, up 3% for the month. But if you look over the course of the last year, or 11 months since the end of 2014, these markets are basically flat or down a little bit for the year, with the exception of NASDAQ. Going on to the more commodities-focused markets, the Toronto Venture down 0.4% over the month, but still hanging in there considering it is so heavily commodity-based. The Venture Exchange is getting hit by tax loss selling, and it's finished the month at 523, down 3.5%. I actually expect it to establish a new low here over the next couple of weeks. The all-time low is 509. Emerging market index, emerging markets are still struggling, especially led by China, down 4% over the month. And then we've added a new parameter here, and it's the VIX. And for those who are unaware of exactly what the VIX is, it's the volatility index on the S&P 500. And it makes sense. There wasn't a lot of volatility over the month, so it was at a fairly low rate of 16 and change.
Yeah, and the VIX is going to give us a good idea of, like you said, the volatility, and not so much up or down, but just the volatility in general. And when you buy the VIX, how does that work exactly, Mickey?
Well, I've never bought the VIX, but you're basically betting by buying the VIX. It's based on the S&P futures trading, so you're basically a bet on if the S&P 500 is going to be volatile. Is it going to go up or down to any great extent? So however it works, it's one of those derivatives of derivatives, and people try to make money on the VIX. But for our purposes, it gives us an idea of the volatility of the major markets over the course of a month.
Yeah, and that's what we're concerned about, obviously.
Absolutely.
So, yeah, and then we so that's a nice addition to the to our tracking the indices, and then for the next part we go into the money markets.
Yep, and wow, probably the biggest story of over the last couple of months, or maybe 3 months now, has been the reinvigoration of the U.S. dollar. So the dollar index was up 3.4%. So it's up about since perhaps midsummer or so. It's up over 6%. It has once again gone over 100. I did that briefly one day back in March or April, if memory serves, went over 100. It is now pushing a 13-year high for the U.S. dollar index. concomitantly as per usual. The euro is down to 1.06, down 4% for the month. Treasury bonds, 10-year Treasury, pretty flat. That rate is 2.21%. It appears that everybody's already baked in the idea of a rate increase here in mid-December of a big 0.25% by the Fed. Yada, 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 blah, 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 ha, ha. And then finally, the most volatile and the most robust of what we track over the last month and even over the last 2 months has been Bitcoin. And Bitcoin was up another 15% over the month, closed the month at 370, almost 377. And Bitcoin hasn't been at this level for a year. If I look at our spreadsheet on 11/30 of 2014, exactly a year ago, it closed at 376. So it took that big dip, and now it's made up, but it's essentially been flat over the last year despite the downtrend.
Yeah, and interestingly enough, during the month, Bitcoin made it up to around $487. So talk about volatility, huh?
Yeah, it's pretty amazing. I'm looking at a 1-year chart of Bitcoin, and if you only could figure it out, you could make money playing the volatility of Bitcoin. But it essentially went parabolic over the course of about a week here over the past month. And yeah, who knows?
Yep, who knows? So it's one of those things.
I guess we should talk to Trace Meyer about that, right?
Yeah, that would be good. Well,
he's someone who likes to talk about the volatility and how you can get in and make money in Bitcoin. So hopefully Trace is doing that.
Yeah, I hope so. Well, on to the metals, and not a very stellar month there, that's for sure.
No, it's been a horrible month for the metals. Gold closed the month at 1065. It just took a crapper over the month, down 7%. Well, we've already told you U.S. dollar was been up 6% over the last few months. So, it's basically if you, the U.S. dollar is the way gold is priced worldwide. Gold is at very high in other currencies, for instance, the Canadian dollar and the Aussie dollar. But U.S. dollars, gold price is controlled by that dollar index, and they're in March step right now. We just did our recent correlations, and the negative correlation of gold and the U.S. dollar inverse correlation is in the mid 0.9 range right now, which is absolutely astounding. Silver lost almost 10% over the month, closed at a little bit above $14. The real loser was platinum, down 16% over the month, closed at $829. We have not seen this level in platinum since its brief demise in October of 2008, October, November.
Wow.
When all precious metals took a crapper in the height of the global economic crisis. I said platinum was the big loser. Actually, palladium was the big loser, down 20% over the month, closed at 542.
Yeah. So, yeah, just carnage in the metals pits there. So how you play them, I don't know, but a ratio's interesting though, huh?
Well, the ratios are crazy. Gold-silver ratio at almost 76. We haven't seen those levels. Well, we saw them briefly at the beginning of the year, but since the global economic crisis, when that ratio actually hit 84 at one point, platinum to gold ratio, I don't know if I've ever seen it this low. I'd have to go back and check our data. We have data on platinum and gold on monthly averages going back to the day that Nixon took the U.S. off the gold standard. I'll go back and see if we've ever seen a platinum to gold ratio this low at 0.78. Platinum, palladium, with the demise in platinum was up a little bit, but still in the 1.5 range. And then we'll go on to copper, and copper again took a big crapper. I mean, all the commodities, there's just been carnage in commodities over the last few months, and exacerbated over the last month. And it started with iron ore and coal a couple of years ago, the bulk commodities, the bulk dry commodities. It spread to the base metals and the precious metals. Copper closed the month at 209. We have not seen levels this low once again since March of 2009, when it briefly hit $1.30 during the toward the end of the worst of the global financial crisis, but down 10% in a month. And it's mainly due to fear of lack of growth in China. It's pretty much a consensus right now that copper is going to grow in demand about 3.5% this year, and the supply-demand balance is very good. Inventories are relatively low, but this appears really to be fear and panic amongst the people that play the speculative market.
Yeah, and we all know fear and greed. That's what drives the markets here, and there's no shortage of fear right now, that's for sure. And getting into energy, another, I guess it's all about the dollar, Mickey. Energy.
Well, you're right, Kerry. Sorry to interrupt. It is about the dollar, but it's also with the oils, both down plus or minus 10% of the month, with WTI under $42, Brent under $45. There is a glut of oil worldwide. So I understand more the correction or the crash, really a crash in oil prices, more than I would something like copper. Copper doesn't seem to be performing as Dr. Copper anymore, or at least given the paradigm right now. But we do have a significant glut of oil in the world. We have inventories, both onshore and offshore inventories, and floating inventories at all-time highs. And the people in the know about this don't really see this changing anytime soon. Certainly, oil prices in the low 40s is going to look eventually result in significant production coming off. But what you have is you've got a bunch of oil exporting countries, or countries that are dependent for their social programs by oil revenues, and because of that, they are very reluctant to decrease production. In fact, they have increased production, which exacerbates the problem.
Yeah, it's a big problem. It is, and hey, natural gas, Henry Hub there, another loser.
Yeah, not much excitement there. $2.21 on the Henry Hub per million BTU, down almost 5% over the month. It was doing pretty well for a little while over the month, but then came in the idea that we're going to have a mild winter in the Northeast, and the speculators came in mass and drove that price down. Meanwhile, uranium hangs in there at $36, up 2% over the month. It seems to establish a base in the plus or minus $36 range. It's been there since April, and I don't really see anything changing in that regard anytime soon.
Yeah, I think it's pretty steady there. I mean, we're going back almost, I guess, a year in that range, and what's it going to take for that to have some movement?
Well, that's the $64,000 question right now. Certainly, there's reason to think in the midterm that, especially with all these anti-carbon initiatives going on in the world right now, that uranium is the only salvation to cut so-called greenhouse gases, if you buy into that, because it is a carbon-free footprint for the most part, other than the construction of a plant. And so uranium looks good in the mid to long term, but certainly not in the short term. Lots of inventory to work through. Encouragement in the fact that Japan is slowly putting reactors back online.
Mm-hmm. So I guess that's a wait and see kind of game there. And yeah, all in all, it was quite a month.
Well, it was quite a month, and really the story was the U.S. dollar and commodities continuing to crash based on the strength of the U.S. dollar, the glut of oil in the world, and flat markets in the U.S. There's not a lot going on in the U.S. market.
Nope, not a lot. We're in that election season, silly season, and we're also in the holiday season. So
yeah, we're in an election season that starts a year and a half before the election. So what are we? We're 3 months into it right now, or 6 months into it, and it just seems to go on and on. It kind of reminds me, I walked into the local Wally World, which is what we call Walmart around here. Walked into Wally World before Halloween, and they were putting Christmas items on the shelves. So
really?
Who knows?
Amazing. Well, hey, that's it for this month. Mickey, hopefully we'll see some recovery this month in December, but who knows? It's hard to second guess these markets.
Well, you should never try to second guess the markets. You should be contrarian and try to find things that are beaten up and unloved. And certainly the metals business is beaten up and unloved right now. And, find me a good copper project someplace in North America, Kerry.
All right. We'll be on the lookout, Mickey. So we'll talk to you next month. Be well.
All right. Thanks a lot, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.